Black House family, what's the word? Y'all already know me, 500K Trey. People also know me as Trey High Power. My real name is Travion Brandon, and I am the head portfolio manager here for Black House Management, New Era Advisors. If this is your first time joining and watching one of our videos, welcome, welcome, welcome here at Black House Management. Our aim on a core level is to inspire, okay? So what we're going to be talking about today is the Confluence Profile 500K model 1 of 1, and this is our system that we trade here within our company. And today we're going to be looking at GC, which is gold, and we're going to be looking at a lower time frame 1 to 5 minute sub-X bull swap continuation play that ran for 3R 15 points. Okay, so please like and subscribe, and let's get into this video. So today's market playbook breakdown, okay? Now, every time we approach the desk today, when I approach the desk, being the head portfolio manager for this fund, my number one thought, I have three of them, but the first one is my profession is managing the downside cost of printing high side returns. Okay, we go into business to make money. Nobody goes into business to lose money. Okay, so in order to make money, in order to print, our number one priority is managing the downside cost. Okay, we need to protect the downside. All right, so that way we can have great days to print high side returns. All right, now the second thought, what I'm thinking about is the small window of opportunity, calculated risk to reward. Okay, there's a terminology that I like to think about. Think about the saltwater croc. Okay, they say the saltwater croc can, I believe, slow his heart rate down to like 3 beats per minute. Okay, and at the right time, the saltwater croc will attack. Nothing in its way will survive the ambush. Okay, so when we relate that to trading, we are looking for the small window of opportunities with a highly calculated risk to reward. Okay, and the third and final thought, always remember this: being profitable is a choice only chosen by the profitable. All right, let's get down into it. So today, the structural setup, as you can see right here, GC, the 15-minute time frame here for New York Open. Let's wait for our small window of opportunity, calculated risk to reward. Coming to the desk this morning, price was rallying very strong off the 5 a.m. pre-market New York Open. We swept London high, pushing up into the value area high and held above major key level 4.25K. Now, the question is, will the auction accept this pricing and shift the value higher towards major key level 4.3K? Okay, that's the question. We are currently hitting this higher time frame descending external range liquidity trend line, so we need to pay very close attention to the order flow to see if sellers become aggressive and we trade back into rotation. And with the dollar being extremely bearish off yesterday's Fed rate cut falling to 8-week lows, gold may trend hard today to the upside. Let's go to work. Okay, so when we came into the market today, as you can see, we took this at 6:25 a.m. I took it Trey High Power. All right. New York opened and we immediately rallied. Okay. New York opened up. We mitigated and tagged 4.25K. We came down. Okay. We swept London low. We hit the value area low. Okay. Buyers developed. And as you can see here in the CVD, we rallied higher. Okay, we broke above the VWAP and we broke aggressively strong major key level 4.25K, and we swept London high. Look at the volume in the CVD rising. Okay, price action. Look at price. Price is rallying. Okay, remember the DXY. Where did it say? Where did I put? With the dollar being extremely bearish off yesterday's Fed rate cut, falling to 8-week lows. Gold may trend hard today to the upside. 4.3K is where I seen the gold hitting today. Now, did I hold my position all the way to 4.3K? No. We made, well, I'm going to get into the video. All right, I don't want to spoil it. All right, so okay, family, I want you guys to go and download gomoon.ai. So this is the pro economic calendar. Okay, every single day we're looking at all of the news that's happening. As you can see, at 5:30 a.m., we had a ton of news come out. We had a PPI come out, PPI, job claims, Okay, this was at 5:30 a.m. Okay, so that's why when all this news came out, you can see how price instantly started rallying off of all that news. Okay, price immediately started rising. We swept London high, we broke above major key level. Okay, and we're now hitting this descending external range liquidity trend line on a higher time frame. All right, Asia high was my first target. All right, so let's go into it. So I leave links to these websites. So before we took this trade, okay, at 6:03 a.m., we had a news article come out where it says DXY falls to 8-week low. Now, the DXY is a dollar, okay? As you can see right here, all of this year, the dollar has just dropped dramatically, okay? This whole year, the dollar has been dropping. The DXY fell to 98.35 on Thursday, an 8-week low. After softer U.S. data that showed initial jobless claims rising more than expected in the week of December 6th, the Federal Reserve delivered its third quarter point rate cut this year and signaled a less hawkish outlook than markets had anticipated. Traders held to expectations of 2 cuts in 2026, even though the Fed's projections pointed to only 1. Okay, the central bank has also announced it will begin buying short-dated treasury bills to support market liquidity starting December 12th, with the initial round totaling approximately $40 billion. Meanwhile, Fed projections now anticipate 2.3% economic growth in 2026, up from 1.8% in September, with 2027 growth at 2%, slightly above prior forecasts. Inflation forecasts were lowered by, I apologize, to 2.5% for 2025 and 2.4% for 2026, remaining modestly above the 2% target. So the DXY to a fell to an 8-week low with all this news happening. Okay, let's keep it simple. Okay, the dollar is falling, as you can see right here. Okay, this is this morning, 6:18 a.m. Okay, look at the dollar dramatically falling to 8-week lows. Okay, this is on a 4-hour time frame, as you can see right here. The dollar dropped dramatically. Okay, now let's remember, let's think about this. Okay, the US dollar and the gold, they trade against each other. Okay, so if in a perfect world, in a very simple world, let's keep it textbook, if the dollar is falling, then gold is rising, right? So that was our thought process coming in today, being that the dollar hit an 8-week low. So coming into the market this morning, as you can see, 6:19 a.m. Okay, here on the 4-hour time frame, this is gold GC. Okay, you can see we're hitting this external range liquidity trend line, and we're buying back up into this daily supply zone. Okay, so as you can see, price right now, price is hovering right now at 251.9. This is a bit above major key level 4.25k. So we hit this trend line once, that's twice, 3 times, 4 times. We got smack back down. Okay, how many times can we hit this trend line before it breaks? Just imagine, like it's like a door, right? Take a sledgehammer. How many times can you bang that door before the door falls? Right? That's the most simplest way that I can put it. So I had high expectations, being that the dollar was extremely bearish. I had a high expectation of this trend line being purged today. All right. So remember, the bias is long. So this was the screenshot of us coming into the market this morning here at 6:20 a.m. As you can see, price trading above major key level 4250. Okay, and we are trading just slightly underneath the value area high. But as you can see, okay, here from 5 a.m. this is pre-market open. We came up, we hit 4.25k. We had a sharp reaction back down. We swept London low, as you can see right here, value area low. We swept London low, buyers developed, and we rallied higher. All right. So the liquidity map. So 5 a.m. pre-market NY, bulls rallied strong. 6:05 a.m. we broke above 4250, pushing into the value area high around 4261. The auction accepted value higher, rallying around 12 points into the mid 4270s. Okay, so we pushed up. As you can see, this is the value area high. We pushed up into the value area high. Okay, had a slight reaction down. We came back up into we aggressively, buyers aggressively attacked the value area high, and we accepted value higher as we rallied around 12 points from 4261 into the mid 4270s right here. Okay, so as you can see, price broke the value area high here at 6:30 New York Open. Okay, and we rallied higher around 12 points. Okay, 6:45 a.m. sellers got aggressive, tanking price back towards the value area high, stopping out all the breakout buyers, building more liquidity. 6:45 a.m. we tanked price. Okay, we tanked price dramatically. So we bought up 12 points and we immediately sold off, and we stopped out all of those aggressive buyers who entered the auction early, stopping out all of that liquidity. All right. So we have a huge buyers building more liquidity. We have a huge delta flip at 6:40 a.m. The delta print went from 69 then to negative 380 in the next bear candle. Okay, so right here, 6:40 a.m. this candle, the delta, okay, and the time and statistics was at 69. And this big, huge bear candle, the delta flipped to a negative 380, huge delta flip. All right, the min delta went from negative 182 to negative 432. All right, so let's get, let me see, where is that? In this candle, the min delta, okay, it went from negative 82. I apologize, it wasn't negative 82, it was negative 18. Please excuse me. It went from negative 18, okay, to an I'm tripping. Okay, no, right here, it was a negative 182. So 6:40 a.m. negative. So even right here, negative 18, negative 182 to negative 432. Okay, so look how the min delta is basically how strong the aggressive selling was at one point in time in a bar. So as you can see, the sellers are getting more and more aggressive. So it went from negative 18, okay, 5 minutes into the open, to negative 182 to a negative 432, and as you can see, that's being rewarded because the market started tanking. All right, sellers aggressively pushing price back into value rotation. So we rallied above the value area high, okay, and then we aggressively pushed right back down into it. Okay, we aggressively pushed back down into it. 6:05 a.m. we pushed higher, breaking 4250. London high. Okay, so at 6:05 a.m. now let's rewind a little bit and let's start to break down exactly what happened. At 6:05 a.m. we push up. Okay, this right here, 4253. 4253. Let's rewind it just back just a little bit. 4253 is London high. 4250, okay, is the major key level. 4250 is London high. All right. So I didn't draw out my horizontal line, but 4250, I drew it out on my broker AMP. Okay, but 4250 is London high. Okay, so 4253, I apologize, 4253 was London high. So 6:05 a.m. we pushed higher, breaking 4253, which is London high. And at 6:15 we printed a bear candle that retested the price level 4253, and buyers supported, pushing price higher in the next candle. So we push above this horizontal line right here, 4253. We push above, which is London high. We push above, okay, and in this candle, 6:15, this 5-minute bear candle, we push back down to retest London high. Buyers supported heavily. We're trading above the VWAP, okay, and we're trading above major key level 4250. Okay, so we push above, we break London high, we come back down to retest London high, okay, and we push higher. Simple, textbook, break and retest. We broke, retested, and we rallied higher. Okay. So now, So now this is the 5-minute demand zone I was interested in longing from once price returned back at 6:55 a.m. I now just needed a 1 to 5 minute sub-X entry confirmation play to set up. Remember, the dollar is dropping heavily, so our intentions was for gold to rise today. That was confirmed seeing the huge rally from the open. Okay, so what I did was, it's a simple. So when price broke London high, we came back to retest. I just used this as a 5-minute demand zone. I drew it out. Okay, as you can see, this blue box, this is now the 5-minute demand zone. So when price returned here, this was the zone that I was looking and being interested in. Buyers, the auction defending this zone heavily, and this is where I was looking to rally from. Apologize, to go long from. Obviously, I wanted price to rally. Okay. Entry confirmation. Once we got the sweep of the 1 minute low, which was the 5-minute 6:25 a.m. candle. Okay, so this candle right here, this is 6:25. Okay, and I'll show you in the next slide. However, once we swept this low, this is where I'm interested in going long from. Once we reclaimed back above this, as you can see, this small red horizontal trend line. Okay, this was the 1 minute sub X level. So this was the top of this bear candle. So this is my 1 minute sub X, 1 to 5 minute sub X price level. Price hit here, we pushed even lower, mitigating the EQ level, and then we took higher. Okay, our market executed once price rose back above the 1 to 5 minute sub X price level, 42.57. This red level right here, this red trend line is 42.57. Okay, this is the top of this 5-minute demand zone, targeting the recent highs. So this was the recent high. So once price swept into this, we had a strong wick out and we broke back above. I market executed and I was targeting the high. Okay, so I took a screenshot of the group. If you do not follow us on Telegram, please follow the group at Blackhouse 500K. Go to Telegram right now, pause the video, type in Blackhouse 500K and join it. All right, so as you can see here at 6:59, I said if we sweep 255.6, this was 255.6, and I'll show you in the next slide. I said if we sweep 255.6 and reclaim with the strong bull candle and the time and statistics give us confirmation from strong buyers, I'll go long. Okay, so I put this in the group. Okay, so as you can see, price came down, hit the zone, we pushed. Okay, let me go to the next candle. So this was the actual screenshot. So this was the zone. Okay, as you can see, this was the low right here. So we came up, we retested the zone, and we pushed up. So I was waiting. I said, if we sweep this level, if we sweep this and we reclaim back above, I'm going to target long. Now, trading gold, I want you guys to understand this. Trading gold, okay, our most high probable setups comes from setups that form around the edges of value. Okay, so the edge of value is this value area high. So being that we're trading near the edge of value, once we got this sweep, okay, when we got this sweep, okay, and I seen the strong wick out, I market executed. This was a setup, okay, that took place near the edge of value. Our most high probable trades come from taking them around the edges of value, looking to capitalize on a move higher or a move lower, depending on which value area we're trading around. Okay, so we were taking a trade near the edge of value, which is the value area high. All right, so my thought process was, if we sweep this with a strong wick out, I'm going long. Okay, so this is the order flow. So price came into this level. As you can see, look at the buyer starting to get aggressive now. Okay, as you can see right here in this 6:55 a.m. candle, we have 137 contracts on the ask. It was only 33 printed on the bid. So that means 137 buyers, okay, looking aggressively to take this market higher. Why? Because now we're coming into that zone. Look at the normal order flow. Look at the normal bid and ask. 2, 10, 24 to 6, 13 to 9, okay, 38, 21, 15, 9, 41, 35, 57. But look right here, 137. That is a huge buyer who entered this market for 137 contracts, looking to take this market higher. Once we hit this 1 to 5 minute sub X level, and we came down into this 5-minute demand zone. But I needed more clarification. Okay, I needed to see the sweep. Okay, and then I wanted to see the reclaim back above, and that is exactly what took place. Okay, look here in this candle, we had 74 contracts. Okay, hit the bid aggressively once we push deeper into this zone, the 5-minute demand zone. Okay, as you can see, it was 102 printed on the volume. But look how aggressive sellers tried to get, 72 and only 16, 49 and only 8. But it was met with no complimentary order flow from sellers, and buyers were rewarded on that aggressive buying in that exchange in the auction, and we capitalized on that exchange. Okay, so as you can see, price did exactly just that. So we came down into the level, we had a small reaction up. As you can see in this red candle right here, we swept this low as I needed to see. We swept this low and we had a strong reaction out. As you can see, this dotted blue line, this was the EQ level of the zone. So this is the midpoint between the high and the low. Okay, so once we swept this low on the 1-minute time frame, we swept it and had a strong reaction out. I immediately market executed once we broke back above the 1 to 5 minute sub X price level point. Okay, so we had a strong reaction down, we swept this low and we reclaimed back above. I market executed, looking to capitalize on that edge of value move. Okay, so we took this trade, this long, at the edge of value, which makes it a more high probable trade for us. Okay, I gave myself a 5-point stop, and I was targeting the high. Okay, as you can see right here in the order flow, price swept the 6:25 a.m. candle. We swept. Sellers tried to get aggressive, which is an even better sign. Okay, because they were trapped. We trapped those sellers immediately. Okay, because look, why do you think they're selling? They're selling because we're underneath the value area high, and they're trying to push price back down into rotation. Okay, they were trapped. Buyers aggressively dominated right here in this bidding. Okay, buyers aggressively took the market higher. Okay, and that's where we entered. We entered at 58.5, and my stop was just underneath the wick, because I want it to be wrong immediately. Okay, because this is where our most high probable setups come from, near the edge of value. So I'm going to set my stop right underneath the wick, because if I want to be wrong, I want to be wrong as fast as I possibly can to get out of this trade. Okay, remember, like I said earlier in the video, this is where we go back to our profession is managing the downside cost. We are here to protect the downside. We need to protect the downside so that way we can manage the high side returns. Okay, our target was around 15 points targeting the high. Price immediately started to rally. Okay, once we hit 10 points, okay, so from 58.5 to 68.6, I immediately put a sell stop for one contract. Okay, so if price was coming to hit us out, we secured that one contract of the table, leaving the second contract, all right, in the fight towards our target. Okay, price came down, it hit our sell stop. Okay, cute, good, cool. We secure one contract on the table, easy call. All right, now we still in the trade, easy call. This is great trading right here. This is great management. All right, I'm giving y'all this in live, fam, live. All right. So the execution moment. So the 5 minutes internal range liquidity sweep and bought from minor support. Okay, the key confluences to enter long. We had news come out stating that DXY had an 8-week low Fed rate cut after yesterday's for 25 BPS. Okay, so yesterday the Fed rate cut happened and the dollar dropped to 8-week lows. Okay, 2, we had a 5 a.m. pre-market NY. 5 a.m. pre-market NY, we immediately started to rally and bulls entered the auction strong. 3, 6:55 a.m. we were approaching a 5-minute demand that broke and retested 42.53, which was London high. 4. As we approach the 5-minute demand zone, the buyers in the order flow started to get very aggressive in the ask with over 100 plus contracts, showing signs of this zone being defended and heavily from buyers looking to lift the offer. And the 5th and final confluence while we entered this trade, I entered once we swept the 6:25 a.m. low and hit the zone's EQ with a strong wick out, and price rose back above the 1 to 5 minute sub-X price level 4257.5. All right, so as you can see, price continuing to rise in our favor towards our target. Okay, beautiful trade. Price continuing to rise, and I trailed my stop even closer to 71.5. Okay, our target was 73.5. And our target was hit. Okay, so as you can see, price rallied all the way up, and we took Friday's, this is Sunday, so we took Friday's New York high, and look how close we are to hitting 4.3k, and that's exactly what price did. Price rallied all the way today to 4.3k. All right, we took London, we took 8. Okay, so we swept London low, we grabbed London high, we took Asia high, and we took last week's Friday's New York high, and we hit major key level 4.3k. 4.3k was hit. Look at the rally, huge rally here on the 15-minute time frame. So this was our entry. Seller buyers pushed price up, came back down to retest this level, and we bought here, and price rallied all the way, and this was our target, this high here on the 15-minute time frame. This is the key, fam. This is the key, bro. This is the key. This is the key right here. So let's talk about the trade flow. Price rallied in our favor as predicted and ran all the way to our intended target. Price continued to trend and even hit 4.3k. So securing 15 points with 5 points of risk equals 3R on the day. We capitalized on the small window of opportunity, calculated risk to reward, and managed to print a 3R return. Good print. Trade high power. So I hope, Black House family, like I said, this is your first time. I hope that this video was very informational for you, and I hope you got some good education. You know, my purpose here is to inspire. Okay, and I want to, let you guys know that this has been a long time coming for building Black House Management. And 2026, we are going to print our greatest number year to date. 2026 is going to be our best year to date. All right, so please like and subscribe. In the description, I want you guys to go and follow the company on Telegram at Black House 500k. I'm going to drop our Twitter, or also known as X, in the description. Follow us at Black House 500k, and also follow us on Instagram at Black House 500k. All right, and remember, when it comes to financial risk management, our job here at Black House Management, our profession, is managing the downside cost of printing high side returns of money consistently through any market conditions. Okay, done correctly, well, an abundance of fruit awaits us. Godspeed, 500k Trey. We out.